Welcome to Analysis in Chains with Nathan and Neal. Lordy, lordy, look who's 40. Episode 40. How you doing, Neal? Congratulations, we made it.
Yeah, I guess we made it. 40. I thought 50 would be a bigger number, or maybe 100. But yeah, I'll celebrate.
We could
40.
celebrate then too. I have enough alcohol to go around.
Good to know. Good to know. I think it's December now, so I'm sure there's a lot of mulled wine over there in Berlin. I know you guys are big into your Christmas markets.
It's definitely one of the draws to come to Germany in the winter is the Christmas markets. They've got them in full swing right now.
Nice. So yeah, I can smell your breath from here. So you must have had a good time down in the Christmas markets today.
Yeah, I did. I was looking over the news before. I know that we've got some stuff to talk about, Neal, but I got to tell you something that I just saw that was amazing. Have you heard of CryptoKitties?
Oh yeah, tell me. I saw it and I just ignored it. Go on, tell me.
Okay. I think that this is the coolest thing in the world. And I've been thinking about the idea of unique digital collectibles for a while. Like, how could you do it? Like unique digital art or something. And someone actually just did it with drawings of cats done. They look like they're done in MS Paint or something like that. But someone just basically created a bunch of different cats that cat pictures and assigned each of them a unique identifier, and they're linked to the blockchain. So, and then you could buy them, and they're unique. They're one of a kind, and one of them went for over $20,000.
Wow.
Because of scarcity, and people actually want a unique item. You know what we could do, Neal, is we could record mini podcasts that are unique and digital and just, link them to the blockchain, and people could buy those. We could give shout outs to individual people.
Which blockchain were they linked to? Which blockchain were they linked to?
I'm not sure. I haven't looked into it deeply enough. Okay. It might be on Ethereum. Okay. But I mean, how hard would it be, create a unique digital signature for a little podcast episode? Then someone would want it.
Do it. Yeah, I'm curious.
Hey, well, dear listeners, would any of you want them? If you want them, we will make them. We'll start the pre-orders. Let us know. What would we call it?
Analysis and kitties.
Analysis. I don't think the kitties would be involved. Anyway, we'll figure out a name later. Okay. So Neal, what I heard big news is coming about Bitcoin futures.
Yeah, so this is it. This is one of the big moments I've been looking forward to, because I really think this is a game changer. So on the 18th of December, we're going to have future contracts available on the CME, which is the Chicago Mercantile Exchange. And it's going to be the first of many exchanges that will offer future contracts in Bitcoin. We know that NASDAQ are also expecting to offer future contracts mid-2018. So to me, this really is a game changer now that it's officially happening, because I feel that this is where Bitcoin stops becoming a crypto, like if we were to compare it to Ethereum or Monero or Dash, and it starts to become something a bit different. It starts to become more of a betting tool that reflects confidence in blockchain.
So when you're saying that they're offering crypto futures, what does that mean exactly?
The best way to understand it is to understand how a future contracts work. And effectively, future contracts are actually a mechanism for mainly speculators. People who want to bet on where a price is going to be. So they're not really owning the asset or the crypto because they don't really want to hold it. They just want to bet on where the price will be. So how it works is that if you are, say you want to short something with a future contract, what you're saying is, I am going to sell you, say, Bitcoin at $10,000 per Bitcoin in the month of March. But deep down, I really know that it's going to be $8,000. So I know I'm going to sell you this. I know that I have this buyer who's willing to buy Bitcoin off me at $10,000. But the thing is that when March comes, when I go to sell it, Bitcoin's at $8,000, which I predicted. I buy Bitcoin at $8,000 on the day I owe you the $10,000, and then I sell it to you at $10,000, which in effect I've just made $2,000 profit. So the idea is that I will be buying multiple Bitcoins. I could buy 1,000 Bitcoins at this sell price in this contract, and therefore my profit ends up being the delta, the difference between the selling price and what I just bought it at, and multiplied by the amount of Bitcoins in the contract. So that means we have a real effective way to short Bitcoin. At the moment, it's the old school ways of shorting Bitcoin, where either you sell your Bitcoin, hope for it to drop and buy it cheaper, but then you're hoping for it to rise up more to make a decent profit. Or the other shorter mechanism is that you take a loan of a Bitcoin or an asset, as you do in financial and Wall Street, and you take on the loan, and while it's dropping, you're selling and you give the asset back. So you made profit on the amount that's dropped. But the problem with that mechanism is that the most you can make back on your bet is 100%. Whereas with a futures contract, you can make 1,000% return on the bet, for example. Now the thing is, it isn't just about shorting. There's also long. You can go long as well. So again, the opposite applies. You expect the price to be higher, and therefore wherever the contract price is, you're saying, okay, I'm going to buy from you at 10,000, but I really think it's going to be 12,000 in March. So when you buy at 10,000, on that day you sell immediately and you made 2,000 profit. So that's the basic idea of future contracts that's going to be brought into Bitcoin. So you can imagine that the amount of people betting on Bitcoin is about to become more intense in the coming months.
It does provide a much more powerful way and a much more institutionalized way of betting on the outcome of Bitcoin. I know that with futures, like, they sort of started as a way of making prices more stable for commodities for businesses that relied on them. Right. So like in the old days, if you had a business that was buying up coal or buying up wheat and the price would go up and down, you would buy these futures contracts to make sure that your price was sort of stable. You'd hedge your bets. But then people figured out that they could make massive amounts of money on them, and it became institutionalized. And I guess I don't know how many people need a regular supply of stable priced Bitcoin, but I do know that with the onset of futures contracts, we're probably going to be seeing a lot of big money makers going in trying to make the big score.
Exactly. But what's going to be interesting is, how does this impact Bitcoin? If we have more institutional investors coming in, does this mean Bitcoin is becoming an institutional tool? Is this something that we're going to see creep more into Wall Street? Like there could be a Bitcoin ETF coming. This is something that many people talk about.
An ETF, Neil?
Yeah.
Forgive me. What is an ETF again?
Okay. So an ETF would be like, if you look at how an ETF works today, it's almost like an index where you will have, if I had an ETF in tech, I will have a certain percentage is made of Facebook, and another certain percentage is made of Google, Netflix, and stuff like this. So
something fun.
Yeah, it's a more diversified way of investing in a sector, or something that reflects something. Like some people have a sustainable ETF, like stocks that are more into environmental causes, or you might have a finance ETF. So there is talk of maybe a Bitcoin ETF or a crypto ETF. And so with these tools coming in, the risk is that you could have crypto creeping into Wall Street and other financial markets. And the thing is that, well, you have to ask yourself, are these financial markets ready for crypto? Is maybe crypto too young? Is it mature enough to be bet on? Because once it enters into these financial markets, well, then it actually becomes a part of your retirement plan. It becomes part of the investments of countries. And so I don't mean to be negative on this direction in crypto, but it brings me back to what happened in the financial crash of 2007, 2008. You had these tools developed based on the housing market, these CDOs. And these CDOs were like a mixture of bonds based on housing mortgages. And so they were seen as a safe bet. Again, going back to futures contracts, as you pointed out, they were made to help stabilize the market. And CDOs were seen as the same thing. But because they're such a good deal and they were just going up, more and more people are plowing into them. And so one risk we have with crypto is that I still feel it's quite young. And the thing about the housing market was that people just thought the housing prices could only go up. And that's why these tools made sense. And they were seen as good value and worth the investment. But if crypto was only going up as it is now, well, then everyone's going to think the same. And it could creep more into the financial market. So that's why this is so interesting. Looking at futures contract, this is the starting point. And if it ends up being a success in 2018, then we could see more of these type of tools like ETFs possibly creep into the market in 2019. So it kind of goes to show how quickly crypto is evolving. And I think it shows how much Bitcoin is evolving as well, because I think Bitcoin will start to become this de facto reflection of confidence in blockchain. So that may sound absolutely ridiculous to think that when you bet on Bitcoin, you bet on blockchain, but it's kind of like gold today. You bet on gold because you fear for the economy, you fear for governments. And I wouldn't be surprised if Bitcoin becomes more detached from what it was set out as and becomes more of a betting tool.
What I'm really interested in finding out is who's able to buy these futures. Because one thing that we've been able to see with our own eyes over the past few months is how easily the market is manipulated by people who have the power, right? So the miners can manipulate the price of Bitcoin. You can have it go up or down by announcing a fork and having a credible team behind you, by canceling a fork. If you're part of the core developers, if you're part of miners or exchanges or government saying, "Oh, we're banning it in this country," then it goes down and back up. And there's a lot of money at stake here. I mean, right now it's still relatively small amounts of value from the big market point of view. I mean, we're talking $100 billion, maybe $200 billion maximum. But once we're getting the big institutional investors who can make massive amounts of money on the futures market, well, then we might see some people throwing their weight around. And there's currently no real mechanism to prevent insider trading or market manipulation other than please don't do that. So I don't know. It almost feels like it's exciting, but a little too soon to allow for futures. But I guess we're still in the Wild West. But I mean, what do you think?
Well, in a way, it's no different to the housing booms, where you had construction contractors were the kingmakers back then. I think back to Ireland when things were really taken off and property was this bubble that was only going in one direction. And construction companies and developers really had a lot of power. They could, in effect, determine that they were, you could say, manipulating the prices by paying off politicians. They were having policies changed in their direction. And so this is no different. Like, you're right, they can be manipulated, but these guys playing the futures market, I'm sure that they will take those things into consideration. They see it as part of the fun. Is that, okay, maybe they're calling up some of their contacts and say, okay, can you tell me what's going on? Like, what's the hash rate now of Bitcoin Cash versus Bitcoin? How's this war going to work out? I'm sure that they will have their ear to the ground, and that's what they're betting on, is that manipulation is part of the fun. And that the futures contracts could be seen as a way to potentially mitigate the manipulation, because everyone is second guessing each other. So if you have a whale coming in thinking, I'm going to cash in big with my move, well, maybe you have future contracts guy going the opposite way and thinking, no, we're gonna take you down. So I think that it's going to be very interesting to see what does happen. The thing about Wall Street is that they're very heavily armed in terms of quant and have a lot of contacts out there and have their ears to the ground. So it could be very interesting when you have like the crypto whales versus the Wall Street quants. And it's going to be very interesting to see who will win out.
Well, when you've got armies of people who are trained in analyzing data patterns, and you've got massive amounts of value, you're going to have information asymmetry. And I think that this is one thing that we keep coming back to over and over again in this show is the fact that there is not a level playing field when it comes to information in crypto. You're going to have a core group of people who believe in a project, be it the Bitcoin, Bitcoin Cash, Dash, Monero, Waves, whatever. And those people are going to be talking to the developers. They're in the know as to what's coming up next. And then you have the people who are investing in it, and they think of it like anything else, like stocks, and they buy their crypto, and they don't necessarily understand what's in the background, what happens. Someone creates a project and it's completely fake and runs off with 300,000 worth of Ethereum, and people start asking, oh, well, what's my recourse? How do I get my money back? And there's no way. Mm-hmm. And it's just something I think people aren't used to, especially when there's so many newcomers to the crypto world, of just how wild it is.
It's definitely a different world, because when you invest in a company, like the general idea is that, okay, I own a part of this company, and therefore a percentage of the profits I should be getting in form of dividend per year. In terms of crypto, there's nothing protecting you. It's just a token that reflects something else. But many people are acting out in a very tribal way. They don't see it as so much, okay, I own a part of this institution. They see it as, this crypto reflects my beliefs. This crypto is the way I see the world. This is the way I see things evolving in the future. And because what we notice from our analysis of different cryptocurrencies is that it's very tribal. Many people are all in. They might have some in other cryptocurrencies, but they tend to be like 80% in on one particular crypto because they feel this is the future. And so it's not so much, I guess they're kind of like investing in something they feel should be the future of cryptocurrency, should be the future of fiscal policy. And it kind of feels like a big financial game. And it has become very detached from normal investing in terms of, okay, I think Facebook is going to go up because they've these better products and stuff like this, therefore I will invest. But crypto is like, no, I believe that this will gain more value because the principles that govern this technology will become more popular. And so it's almost like an ideology investment as opposed to a tangible investment in terms of producing improved product or improved profits. It's about, I think I feel like it's such an ideology driven world. But the thing is that there will come a point where those principles will have to change, and people are going to be investing more in, okay, is this Ethereum token taking off? Are we seeing more businesses depend on this Ethereum token? Are we seeing more merchants using Dash instead of Bitcoin or Bitcoin Cash? And I think that will eventually become more important. But today, it's just tribal. That's, I think, the only way that can really explain things. And so because it's tribal, therefore it depends on network effects to grow. I tell my friend about this cryptocurrency, he tells another. And so it's no surprise that over the course of Thanksgiving, we saw this huge explosion in US dollar investment in cryptocurrencies because everyone got home for the weekend and told people about this amazing investment called Bitcoin. And so all these people plowed in. So I really think that we're at this wild west phase, as you just said. And I think that it's only a temporary thing, but will evolve into something different when more experts come in and people become more demanding of their cryptocurrencies.
Last night, I was at a consensus event where Joseph Lubin was speaking, and I got to ask him a question. That was pretty cool.
You should probably explain to people who Joseph Lubin is.
I'm sorry. Joseph Lubin is the founder of Consensus, and he was one of the co-founders of Ethereum back in the day. And so at the event yesterday, everyone wanted to speak to him. He was a little bit like blockchain Beyonce or something. Like everyone was like, yay!
I think you're being too kind. I think he's up there. I think Consensus is almost like the Google. It's like a Google company because like Ethereum is a token or a network, you could say. But as a company, Consensus, you could say, is like Google was when it came out in the early 2000s because Consensus are doing some incredible things with Ethereum. Yeah. And he's really up there.
I asked him about the maturing of the crypto market because one of the issues that a lot of Ethereum startups are facing is sort of like this tension between wanting the price to go up and really break out, and so that the investors in Ethereum will get a lot of money, and needing a stable price for their businesses to run, because they have to pay for Ethereum transactions in Ethereum, in gas, and the prices directly affect their ability to make any money. And the reality is a lot of crypto businesses have to have a legitimate business model. Even though they're built on crypto, even though they're token based, they have legitimate business models behind them where they're providing a service, maybe to other businesses or something, or to other crypto or exchanges or whatever, but legitimate services. And these services cost transactions, which take money. And so how do you resolve in the future this tension between sort of the two needs of wanting the price to go up and wanting the price to be stable? And it's just this idea of crypto futures may be part of the answer. The more I think about it, if you're dependent on an unstable price commodity like Ether, then having a futures market for it could help hedge your business and make sure that you're still able to be stable in the future. So it is a thought and something I hadn't considered until our conversation.
Yeah, I do wonder how many of them hold onto say crypto whenever they do a transaction, because I doubt it's in many of their interests to do a transaction in a crypto and just keep it somewhere, because the risk could be that when they need to cash out something or pay for something, if Ethereum, say, drops 20%, that means they've less cash to pay for something and they've lost 20% in assets. It is interesting. Like I imagine many of them do a transaction in Ethereum or crypto and then convert into fiat immediately. That's what I think a lot of people do at the moment, because cash is king and they need to try and run their business. They have to pay employees, they have to pay for rent, which are all fixed to fiat as opposed to Bitcoin and other cryptocurrencies. But you're right. It's like, this does have a good opportunity. Futures, I guess we'll see how it goes, or it could go completely south. It could be that we could see these guys just all bet on Bitcoin going to 1,000, and then it could just completely upset the market. It's hard to know. And I think 2018 is going to be very interesting because we know we'll have two markets doing futures, and then we could see Ethereum and the likes join in if it ends up being a success.
I think the last point I want to bring up is just something that I've noticed. I saw a number of people pitch last night. I was talking with people who had their own ideas that haven't launched yet, and you can really tell the difference between the companies and the people and the ideas where they hadn't thought through the business model and they were relying solely on network effects, and the ones who had. Because, and a lot of the people around me felt the same thing. Like there were some who had pitched or who had talked, who described this system of creating tokens and incentivizing people or companies or whoever by giving the tokens. And then the question is, well, where does the money come in? Or where does the real world goods and services come in? Because at some point the tokens have to be redeemable or tradable for something tangible in order to hold value. And it's just interesting because I think as this is maturing, we are beyond the point where the useless tokens are able to succeed. I think people are becoming a bit more aware of the projects they're investing in. I think that's a good sign for market maturity.
Yeah, I completely agree with you, because there are so many tokens out there that are absolutely pointless. And back in June or July, I noticed that a lot of these useless tokens were getting a lot of value for no reason. I have to look at them again to see how they're doing. Like stuff like Trump coin, like where's the use in Trump coin? But it seemed to be worth over $1 million at one point. And it went up on his inauguration day. So there are some useless ones out there, and I think they're there as a novelty maybe, but I can't imagine they're worth like more than 5 cents. So I'm very curious, and I will do some analysis just to see how they're doing, because I do believe, like you are right, that we are seeing a lot more of the tokens and coins out there that have a more thought out market need and have very good, say, infrastructure in terms of a good development team. They have a good advisory board and stuff like this. That the whole days of saying, I'm going to be making this blockchain or I'm making tokens for this need and not giving any more details on it, I think those days have now passed. Particularly when you see stuff like Tezos and how they're having trouble at the moment, and there's all these other scams we've heard about, that I think people coming into this space have learned a lot and are becoming a lot more picky in terms of ICOs. But also if they were to pick something on CoinMarketCap to invest in, I think they will do a lot more research now. So yeah, I completely agree with you. And I think 2018 is going to be a very, very interesting year, because I think all this knowledge is going to help people make improved decisions, and it could really help us separate the men from the boys.
All right, Neal, prediction time. So here's the big prediction question.
Okay.
What is going to be the token aside from Bitcoin that you think is going to have futures on it next?
I would say it's going to be Litecoin.
Litecoin?
Yeah, because Litecoin and Bitcoin are very close in terms of their development teams. And I wouldn't be surprised if that becomes the next one, because the Bitcoin community are very, very receptive to it being used as a commodity on the same wavelength as gold. And this is what we keep seeing, digital gold. And we know that there's been like these transactions between Bitcoin and Litecoin, between the two blockchains. So they've been working very closely, and the guy who set up Litecoin is a big Bitcoin supporter as well. So I can see Litecoin be the next one. I know Ethereum may be the easy answer to give based on what Joe Lubin was saying, but
yeah. Also the need. I think there's a need there for it, although you're right, technically it's not as close to Bitcoin, so it might be more complicated to get that running on the same exchanges.
But I think it could be more of a community decision as opposed to a Wall Street decision, because if people are pitching their crypto as an asset, they're asking for it to be treated as an asset. Whereas I feel that Ethereum community is more techie. It's more about creating solutions.
Yeah, you're probably right. It's either that or CryptoKitties.
Yeah.
That's the one I'd like to see. CryptoKitties futures. A couple of announcements as we wrap up. If you are in Berlin, you should come to our live recording. We're doing a meetup on December 14th at 7 p.m. at the Impact Hub in Berlin. We're going to have Joseph Skigala there, the CEO of Vaultoro. We're going to be talking about his exchange. We can talk about futures, because that's going to be coming up 4 days afterwards, and see his views on that. We can talk about transparency, corruption, all sorts of things that affect exchanges. So if you are in Berlin and you would like to join, then join us on Meetup. We'll put the link in the description of the podcast notes. Any other announcements, Neal?
Not many announcements. Just watching Bitcoin increase up and up and up, despite everything that's been thrown at it. And I may have to throw in the towel myself and just accept the fact that it's just going to keep going up. Despite risks ahead, it may just keep going up for another 2 or 3 years. So I guess we're going to have to talk less about. I think we have to talk less about crashing any moment and just expect it just to keep going up to the moon. I think I finally joined that team now because
you've converted. You're on the. Let it be known that today, the 3rd of December or 4th or whatever the day is, that Neal has joined the To the Moon crowd.
Well, I'm to the moon, but I have a parachute because I still think that there's many risks ahead, but I think there's greater forces at play now that and that's why I now think it has to be treated differently to Bitcoin Cash and
no nuance. You're to the moon. Gotcha.
Yeah.
All right. One last thing, we are going to be experimenting with changing Friday's podcast. We are going to try and post it on Thursday. So, thank you for joining. Have a great week.
That's our show. Thanks for tuning in to Analysis in Chains with Nathan and Neal. Check us out at analysisinchains.com, on iTunes, Podbean, and wherever else you listen to podcasts. Until next time, keep hashing.